When the crypto market started recovering late last year, Solana took center stage in the eye of investors, with many convinced that this so-called Ethereum killer would be the top crypto of this cycle. In recent months, however, the spotlight has been turning to Sui, a so-called Solana killer, whose relentless rise is causing investors to question whether it may actually turn out to be the top crypto of this cycle. And that's why today we're going to compare Solana and Sui across various metrics to determine which crypto is best and just how high each one could go. If you hold Sol or Sui, this is a video you can't miss. I'll start by saying that nothing in this video is financial advice. It's purely educational content made to inform you about the similarities and differences between Solana and Sui. I'll also note that many members of the Coin Bureau team hold both Sol and Sui, including myself, so rest assured that we'll be impartial in today's analysis. If you're curious about which cryptos we hold and which ones we're personally considering accumulating, then become a member of the Coin Bureau Club. In addition to our portfolios and watch lists, members get access to weekly reviews of promising small-cap cryptos, daily crypto insights, and real-time market alpha in our private Discord. The link will be in the description. Now, as with our previous comparison videos, we'll be comparing Solana and Sui across 5 metrics, or rounds, if you will. Founders and funding, technology, tokenomics and price potential, adoption, and challenges. At the end of the video, we'll see how they stack up and tell you which one we think is best. So if you're excited for that epic matchup, then be sure to smash that like button to let us know, and subscribe to the channel and ping the notification bell as well, so you don't miss our next altcoin comparison. With all that said, it's time for round 1, the founders and the funding. Now, Solana was founded by a former Qualcomm software engineer, Anatoly Yakovenko, in 2017. Solana's original purpose was to be a decentralized competitor to centralized stock exchanges like the Nasdaq. It has since pivoted to being a general-purpose blockchain supporting multiple use cases, such as DePIN and payments. Solana was built by an American software company called Solana Labs, and its ongoing development is coordinated by the Solana Foundation, which is a Swiss non-profit. Solana's mainnet went live in March 2020, but it's still technically in development. Apparently, Solana will be considered complete once its Firedancer validator client has been rolled out. And this rollout began last month and is expected to finish sometime next year, but more on that a bit later. Regarding funding, Solana raised around $25 million across various ICOs conducted in 2018, 2019, and 2020. Now, Solana raised an additional $314 million from crypto VCs in June 2021. And this is significant because post-ICO funding is typically a sign that investors are extremely bullish about a crypto project. But in Solana's case, unfortunately, all this funding turned out to be a source of FUD. And this is simply because FTX was one of the biggest investors in Solana and its broader ecosystem. Following the collapse of FTX in November 2022, the Solana Foundation disclosed that around 58 million SOL had been sold to FTX and Alameda Research. Thankfully, though, the FTX bankruptcy estate managed to sell its remaining 41 million SOL to investors over-the-counter, or OTC, in March of this year. And although these OTC sales were made at a really steep discount of almost 70%, they did come with a 4-year vesting schedule, which should have a minimal impact on SOL's price for the next 2-3 years. Now, as for Sui, it was technically founded by Meta when it was still known as Facebook. To refresh your memory, Facebook tried launching its own digital currency called Libra in 2019. And after rebranding to Diem and trying and failing to appease regulators around the world, Libra was shut down in January 2022. Shortly before Libra/Diem died, the team behind the project split into two to create their own crypto projects based on Libra's tech. One team created Aptos, and the other team created Sui. And this begs the question of what makes them different. And one of the answers appears to be the team. It appears that the team behind Sui was responsible for creating Libra's core technology, specifically Move, a new programming language. And Move was originally created by Sam Blackshear. And Sam is one of the 5 co-founders of Miston Labs, which is the American software company that created the Sui blockchain. Sui's ongoing development is coordinated by the Sui Foundation, a non-profit based in the Cayman Islands. Sui's mainnet went live in May 2023, and it is also still in development. The difference is that the work in progress also applies to the Move programming language, which Miston Labs is also working on. In terms of funding, Sui raised almost $400 million across various ICOs conducted in 2021, 2022, and 2023. Naturally, FTX was also a big investor in Sui and held lots of Sui tokens when it collapsed. But thankfully, though, Miston Labs managed to buy back FTX's entire Sui allocation for $96 million in April 2023. All right, time for round 2, the technology. Solana uses a proof-of-stake blockchain that's theoretically capable of processing up to 200,000 transactions per second, per an interview with one of Firedance's developers. And this speed is made possible by a combination of key innovations. The most important of these is proof of history, which is often mistaken to be Solana's consensus mechanism. In truth, proof of history is just a part of Solana's proof-of-stake consensus, and it essentially makes it possible for transactions to be timestamped so that they can be processed in parallel. Another one of Solana's key innovations is its block time of 400 milliseconds. For context, a crypto's speed is effectively determined by the number of transactions that can fit in a block and how fast each block is propagated on the blockchain. Solana's 400 millisecond block time is therefore a big contributor to its speed. The Solana blockchain is currently secured by around 1,400 validators, which makes it theoretically quite decentralized. In practice, Solana transactions are processed by smaller clusters of validator nodes. And Solana's full transaction history is also currently stored on Google Bigtable, which is of course a centralized server. Solana staking rewards are currently around 6.5% for validators and delegators, with a lockup period of roughly 3 days and with slashing enabled. While there is no minimum stake to become a validator or delegator, the hardware requirements to be a validator are quite high, and rewards are proportional to stake. But back to Firedancer. You'll recall that it's a new validator client that's currently being rolled out on Solana. And you can think of validator clients as the software that validators use to interact with the Solana blockchain. Before Firedancer, Solana had 2 clients, both of which were quite similar in terms of tech. Firedancer uses different technology, which is quite frankly outside the scope of this video. But the main takeaway is that it will increase decentralization and speed. And it seems that 2 additional validator clients are also in the works, and this would bring the total number of validator clients to 5, which is actually on par with Ethereum. Now, Sui. It uses a delegated proof-of-stake blockchain that's theoretically capable of processing up to 297,000 transactions per second, per a test it conducted in April 2023 with a set of 100 validators. And this speed is likewise made possible by a combination of key innovations. The most important of these is the Move programming language, which focuses on objects rather than accounts. For reference, most smart contract cryptos keep track of account balances. By contrast, Move cryptos like Sui keep track of where objects are on the blockchain. It's a brand new approach to crypto. You can think of account-based cryptos as being analogous to using a card to pay at a grocery store, and object-based cryptos as being analogous to using one of those Amazon walkout stores. The former keeps track of your account balance, whereas the latter keeps track of the objects you're interacting with. And yes, I know that Amazon walkout stores turned out to be a bunch of workers in an Indian outsource center watching people on cameras, but let's go overthinking analogies. Anyway, Sui's use of Move and its object-based orientation makes it possible to do things that are impossible or very difficult to implement on account-based cryptos. I can't give you any concrete examples because even crypto developers don't fully understand the possibilities of this approach yet. Anyways, another one of Sui's key innovations is one that was recently released, and that's Misty SETI. Now, Misty SETI reduced Sui's transaction finality to 390 milliseconds, a single block. And given that Solana's finality time is up to 12 seconds, this technically makes Sui faster than Solana, at least for now. But of course, this comes at the cost of decentralization. Sui's blockchain is currently secured by just 108 validators, which makes it quite centralized. And this low validator count is likely because the minimum stake to become a validator is currently 30 million Sui. That's over $60 million at the time of shooting. Fortunately, there is no minimum Sui delegation, and the unlock time is around a day. Unfortunately, Sui stake in rewards are currently only around 3.3%, and there is also the risk of slashing. Not very good. But back to centralization. Last year, Sui had thousands of full nodes storing its full blockchain history. And earlier this year, Sui had fewer than 500 of them. In our last Sui update in August, we noted that the full node count had actually been scrubbed from one of its explorers, suggesting that it had actually fallen even lower. To be fair, Sui is currently in the process of rolling out a decentralized storage solution called Walrus, which will presumably store its full blockchain history in a decentralized way. However, it seems there's still work to be done on the validator client side, as Sui's documentation suggests there's only one. Okay, time for round 3, Tokenomics and Price Potential. Now, Sol is the native cryptocurrency coin of the Solana blockchain. It's used for staking, to pay for transaction fees, and will be used for governance. Initially, 50% of all transaction fees on Solana were burned, and Sol burns were removed in May this year. Sol had an initial supply of 500 million, which was distributed as follows: around 60% to investors, 20% to the team, and 20% to the Solana Foundation. I'll note that some sources suggest slightly different allocations, but it seems that all of them are on the same page when it comes to Sol's vesting schedule. As you can see, Sol had a ridiculously aggressive vesting schedule, with 90% of its initial supply entering circulation in January 2021, and 100% of its initial supply being in circulation by December 2022. What's odd is that most blockchain explorers note that not all of Sol's supply is in circulation yet. Could be that FTX Sol that was sold OTC. In any case, Sol had a fairly high inflation rate, which began at 8% and will gradually fall until it hits 1.5% as a terminal rate sometime in 2031. And this added an additional 86 or so million to its total supply, bringing it to 590 or so million Sol you see on most explorers under total supply. Incredibly though, Sol's aggressive vesting schedule and high inflation rate have had next to zero effect on its price action. With an ICO price of around 22 cents, according to ICO Analytics, early Sol investors are up a staggering 650 times on their investment at the time of shooting, and Sol, it's not even at its all-time highs. When it comes to Sol's long-term potential, we believe it's possible that Sol is following ETH one cycle behind, and this would mean Sol hitting a market cap of around 550 billion. With a current market cap of around 70 billion, this would translate to a gain of roughly 8 times, or a Sol price of around $1,100 at the cycle top. Now, as for Sui. Sui is the native cryptocurrency coin of the Sui blockchain. It's used for staking, to pay for transaction fees, and will also be used for governance. What's interesting is that Sui transaction fees also include storage fees, which can partially be redeemed by deleting non-essential transaction data. Anyhow, Sui has a maximum supply of 10 billion, which was distributed as follows: 50% to community reserves, which includes staking rewards, 20% to early contributors, 14% to investors, 10% to Miston Labs, and 6% to early participants. And I'll note that some sources suggest slightly different allocations. As you can see, Sui's vesting schedule is also quite aggressive, but the biggest cliff already occurred back in May, and the next cliffs don't come until May 2025 and 2026, and they're barely visible. Notably, vesting for investors ends on these two small vesting cliffs, with the other allocations unlocking 4 years later. When you compare Sui's vesting schedule to Sol, it's a bit funny that everyone was freaking out about how Sui's vesting cliff in May could crash its price. In retrospect, the crash in Sui's price was due to nothing more than bad market conditions. The FUD around Sui's vesting cliff was just a narrative. After all, it seems that Sui's price hasn't rallied nearly enough for early investors to want to sell. According to ICO Analytics, Sui's ICO price was around 10 cents, which means that early investors are up only around 20 times. It's safe to assume that they'd like a much larger return before cashing out. When it comes to Sui's long-term potential, we believe it's possible that Sui is following Sol one cycle behind, and this would mean it hitting a market cap of around 70 billion. With a current market cap of around 5.5 billion, this would translate to a gain of roughly 12 times or a Sui price of around $24 at its cycle top. Just note that it'll probably be closer to $20 when you factor in the additional vesting, so a 10x. And if you want to maximize those returns, then check out the Coin Bureau deals page. It's got trading fee discounts of up to 70% and sign-up bonuses of, get this, up to $100,000 on the best crypto exchanges. You see, these deals, they won't be around forever, so take advantage of them ASAP using the link down below. Cool, time for round 4, adoption. Phantom, Solana's most popular browser extension wallet, has over 4 million downloads. The Sol Scan Explorer notes that Solana has 5 million monthly active wallets. This is consistent with data from DappRadar, which notes 5 million unique Dapp users over the last 30 days. Solana's DeFi protocols also have around $5 billion in total value locked, or TVL, according to DeFi Llama, making it the third largest blockchain by TVL after Ethereum and Tron. You'll notice that this figure has been holding quite steady since the spring, and this is likely a consequence of Sol's relatively choppy price action. On the developer front, Electric Capital's developer report notes that Solana currently has around 2,900 monthly active developers, accounting for more than 10% of all monthly active developers in all of crypto, which is not bad at all. Now, I'd be remiss if I didn't mention the adoption of Solana's Saga phones. FYI, crypto hardware could become a huge narrative of this cycle, and it seems that Solana and Sui are competing on that front too. In Solana's case, Seeker, the second version of its phone, reportedly had over 140,000 pre-orders as of September. Now, as for Sui, the Sui wallet and Suet, which are Sui's most popular browser extension wallets, collectively have over 1 million downloads. The Sui Scan Explorer notes that Sui also has over 5 million monthly active wallets, which is surprising, particularly given that Sui's DeFi protocols only have a few 100,000 active users. It's hard to say for sure, as DappRadar currently doesn't track Sui dApps, but this hundreds of thousand figure comes from another Sui explorer called Sui Vision, which reveals a peak of around 100,000 users on Sui's DeFi protocols over the last 30 days. DeFi Llama notes that these DeFi protocols hold over $1 billion in TVL. Even though Sui's TVL statistics seems to be going up and to the right, it's important to remember that most of the TVL gain is likely coming from the increase in Sui's price that's occurred in recent weeks. Logically, Sui is the main crypto used in its DeFi protocols, which of course causes their TVL to fluctuate with its price. On the developer front, Electric Capital's developer report notes that Sui currently has around 1,100 monthly active developers, and this is impressive when you consider that Sui's market cap is 12 times smaller than Solana's. Now, I'd be remiss if I didn't mention the adoption of Sui's handheld gaming device, the Sui Play 0x1. A September post from Sui Play on X notes that over 2,000 devices had been pre-ordered in its first 2 weeks. And this underscores the apparent discrepancies between Sui's supposed adoption and its actual adoption. Okay, time for the fifth and final round, challenges. Now, Solana's biggest challenge is probably its reputation. Now, Solana's history with FTX seems to have put off some investors, while its VC-focused supply has put off others. However, the more practical reputation hurdle is Solana's reliability. Solana has become infamous for experiencing outages, the most recent of which took place in February this year. It's hoped that the rollout of the Firedancer client will make its blockchain more stable, but it could also introduce additional technical issues. At this stage, Solana cannot afford any more of either. And this ties into Solana's second challenge, and that's development. Building on Solana has in the past been likened to chewing glass, given that it's supposedly quite difficult. And you'll recall that Sui has a high developer count relative to Solana. And this has more to do with the difficulty of building on Solana than the ease of building on Sui. On that note, you should know that Solana is coded in Rust, and that the Move programming language happens to be similar to Rust. And this presents a threat to Solana, as its Rust-based developers could begin migrating to Move chains such as Sui, and some of them actually already have, Solend, aka Save, being one example here. And this relates to Solana's third challenge, and that's competition. Now, Sui is not the only Solana killer out there. There's also Aptos, which you'll recall also uses the Move programming language. And some would argue that parallelized EVM chains like Monad and Sei are also Solana killers. More about Sei in the description. Now, with so much competition, the stakes are extremely high for Solana. Any outages, technical issues, or development hurdles could quickly result in lost investment, liquidity, and of course talent. From our perspective, the main thing that's given Solana an edge so far is that it's incredibly user-friendly, and you can of course thank the Phantom wallet for that. Now, as for Sui, its biggest challenge is probably development, specifically the development of the Move programming language. And if you've been keeping up with our Sui reviews, you'll know that Move-based blockchains experienced a vulnerability in May last year. It was the first, and it won't be the last. It's easy to forget that the team behind Sui isn't just building Sui. Mysten Labs is literally building a new standard of crypto development alongside it. Similarly to Solana, this makes the stakes very high because any critical bugs with Move's tools could not only break Sui, but other Move-based chains too. And this ties into Sui's second challenge, and that's narrative, or rather the thing that sets it apart from other Move chains, particularly Aptos. At first glance, there's nothing that really differentiates Sui and Aptos. But of course, when you dig deeper, you realize there is a lot more. However, most investors focus on high-level narratives rather than the nitty-gritty tech. And this challenge is significant when you realize that institutional investors are likely to play a bigger role in this crypto bull market. If you've been keeping up with our Ethereum reviews, you'll know that the absence of a clear narrative has been a barrier to ETH's institutional adoption. Sui could face this too, and yet Solana somehow seems to be hitting it off with all the institutional investors. Anyhow, this relates to Sui's third challenge, and that's competition. Sui isn't the only Solana killer, and that presents almost as much of a challenge to Sui as it does to Solana. Other Solana killers like Aptos have the same amount of funding or even more, and also seem to have other less evident advantages. For instance, Aptos seems to be an onshore crypto, meaning that it has closer relationships to institutions in places like the US and the EU. Franklin Templeton recently launching a tokenized money market fund on Aptos is one of the many data points to suggest that Aptos is an onshore crypto. Conversely, Sui seems to be an offshore crypto, meaning that it has closer relationships to institutions in places like Asia and the Middle East. Sui partnering with one of ByteDance's subsidiaries for GameFi and SocialFi in April is one of the many data points that suggest Sui is an offshore crypto. Depending on what happens with crypto regulations around the world, Sui's apparent offshore status could make its competitors more or less attractive to investors and users. Consider a scenario where Asian countries start cracking down on crypto, and that would obviously be bad for Sui. And that's the bell. Gloves down, and let's see who wins. Sui arguably wins the first round, and that's just because it was initially funded and built by one of the largest tech companies in the world. It's easy to forget that the story of Sui, it doesn't start with Mysten Labs. Lots of work had been put into it already. Chances are that Facebook allocated hundreds of millions, if not billions of dollars to building out Libra and wrestling with regulators to try and launch it after rebranding to Diem. And this was probably a valuable experience that no other crypto project has had besides, of course, Aptos, which you'll recall also came from Libra. Sui also wins the second round, and that's just because it leverages cutting-edge crypto tech. And if you watched our recent Aave update, you'll know that Aave founder Stani Koluchov believes that the Move programming language is the future of crypto, and he's not the only crypto OG who feels this way. This is not surprising when you understand that the object model made possible by Move opens the door to a new universe of use cases that crypto developers have yet to conceive. With Sui's team working on Move, this puts it in the perfect position to capitalize on this next generation of crypto. But Solana arguably wins the third round. And this is just because most of Sol's supply has already vested, and by this point its supply is mostly held by investors who believe Solana has really long-term potential. And this is not the case for Sui, where there's still lots of vesting left and lots of early investors waiting to cash out. Not only that, but the potential returns for Sol and Sui are similar despite their difference in size, 8 times for Sol and around 12 times for Sui, likely closer to 10 times when you factor in the additional vesting. It's safe to say that larger, more established cryptos have a higher chance of hitting these targets than smaller, less established ones. Solana also wins the fourth round, and that's just because it has objectively higher adoption than Sui. Even if the numbers around Sui's active wallets are accurate, Solana has had exponentially more integrations with institutions like Visa and has so far seen exponentially more retail adoption than Sui. Not only that, but this trend is likely to continue because Solana is exponentially more user-friendly than most cryptos. At the same time, it's more familiar to existing crypto users because it's been around for more than 4 years. And the fact that its Phantom wallet raised $109 million to improve UX, that also helped a lot. And this leaves the fifth round, challenges. Now, whether Solana or Sui wins this round ultimately depends on which challenges you believe are bigger. And if you think about it, this is the only round where things become very subjective because you're fundamentally dealing with things that can't be measured empirically. You're dealing with things that can't be predicted, like another outage on Solana or another vulnerability in the Move code used by Sui. Still, it's clear that Solana has a lot to lose and Sui a lot to gain. If Sui experiences an issue, it's a growing pain. If Solana experiences an issue, there's arguably a lot more on the line. But again, you're dealing with things that can't be predicted, which is exactly why most members of the Coin Bureau team hold both Sui and Sol. In our view, Sui is a hedge against Sol, and Sol is a hedge against Sui. If one suffers, the other will benefit. By holding both, we win no matter the outcome, unless Sui and Sol both experience critical issues at the same time, but let's not go there. Okay, that's all for today's video. If you found it informative, be sure to smash that like button to let us know. And if you want to stay informed about promising crypto projects, well, subscribe to the channel and ping the notification bell as well. And if you want to inform others about Sui and Solana and how they compare, why don't you share this video with them? As always, thank you very much for watching, and I'll see you in the next one. This is Nick, signing off.